I wanted to tell you about the system and how it operates and share with you what you can expect to see. First of all, the Day Trading Visual Basics system is a reversal pattern system. We identify patterns. We reversal patterns, cycle reversals, high cycles and low cycles. We came up with this idea primarily because we wanted to have, we wanted to have a system that would identify or pick up on the strength of a market movement. Obviously, gaps are real strong next day movements. Excuse me. But we also wanted to be able to pick the tops and pick the bottoms of cycles. And in so doing, we recognized we identified that there was strength at certain times in through indicator line lengths. We could pick up on stronger market force within the stock. And there are basically two types of trades: gap trades, and I'll refer to them as reversal trades. They can be just one day, or they can be many days long. The system is set up with patterns and conditions and signals, which are basically indicator line arrangements that identify certain patterns or setups that will move in a predetermined direction once the signal goes off. We have patterns in shapes, and we have patterns by name. For example, a pink-green bottom is a zip green at 0 with pink right next to it going down until the signal day when it goes up. And so we have named patterns, we have shaped patterns like BOC, bottom of cycle patterns, or high M patterns, right leg W patterns. There are over 20 patterns up and 20 patterns down. And we created very sensitive indicators starting in about 2007. And as a result, developed those, tested, analyzed, retested, and finally we tested probably over 13 or 1400 and came up with 40 indicators that we kept, but only 22 of them are market force recognition indicators, MFR. And those are the heart of the system. The system has three powers within it: the indicator power, which are the sensitive indicators; the formula power, which is the three-step formula with patterns, conditions, and signals; and the procedures power, which is basically the analysis that's done each and every day as a trader, with your knowledge building and growing stronger as you analyze indicator movements in relation to what price is doing. The three-step formula with patterns, conditions, and signals is a situation where we identified those 20 plus patterns up and 20 plus patterns down, and then we were able to over time determine what conditions were needed, indicator conditions were needed in order for the pattern to go up. For example, you take 10 generic patterns, identical generic patterns, 2 of them might end up with long green candles the next day. 5 or 6 might be small green candles, and 2 or 3 might be just flat or red candles, even small red candles. What's the difference? Obviously, market pressure and market push is the difference. And so we worked with those patterns over the years and determined what conditions were needed to give us those 2 days that had higher green patterns or higher green candles to them. Those are called patterns with good conditions. Obviously, you have bad conditions, poor conditions, and good conditions, and you have bad, poor, and good market forces affecting that particular stock movement the next day. Excuse me. Now, the type of signal that goes along with that would time the entry point and the exit point. And so patterns with good conditions and using signals, we could literally revolutionize the high probability rate of how the trade would go based on the anticipated direction we thought it would go. And with that confidence, with that knowledge, with that just that information, that tremendously affects your trading ability. It gives you great confidence because you're relatively sure which way the stock is going to go before it opens. Obviously, you obviously you wait for the open and see if it gaps up or gaps down or stays about the same. And then if you're not familiar with red candle theory or green candle theory, a green candle typically opens and then goes down. Now it can open up or down from the previous close, but when it opens, it goes down, and then all day it goes up, and then at some point it comes down, and you get a tail on each end of the candle. Likewise, a red candle opens, goes up, and then goes down all day, and then comes back up at the end of the day with a tail on each end of the candle. And so when it opens, you can sometimes determine if you're going to have a red candle or a green candle that very day. And obviously, obviously you can get flat bottom green candles or flat top red candles, indicating that the market is starting off immediately and going in that direction. Now, all that being said, we end up with high probability trades. Every trade we make is a high probability trade. Now, if you take those ideas of having conditions with patterns, then you can transfer that into what we refer to as supporting evidence. Or in other words, you might, on any given movement, you might see 5 or 6 different patterns, like a right leg W or a TOC or a BOC, 5 or 6 of those shaped patterns or named patterns, and then a few other things. And all of those patterns are either going up or going down. Now, you can get mixed patterns, and those, normally what happens there is, for example, you're in a downtrend and you get some mixed patterns that are there, and you go, what is going on? And what happens is it gaps down but becomes a green candle. And or it could gap up and then turn down and be a red candle again in the continuation of the downtrend. Either way. But you can spot those patterns telling you that they're mixed and telling you that something's going to go on differently than what you might normally expect. When it comes to gaps, the method that we use to find gaps is with 3 patterns simultaneously analyzed, and those 3 patterns then give us the information that we need to identify whether the stock is going to gap up or gap down. Because there are different patterns for the different that's not exactly the case, but there's when you understand how the patterns move, like BOCs, for example, can be on the top of a cycle or at the bottom of a cycle, but we know how they move. So there's 20-some plus patterns up and 20-some plus patterns down. And when we see those, we can identify what direction the stock is going to go. So we don't miss direction, but sometimes we'll end up with, instead of a gap up, we'll get a long green candle, or we'll get 2 large green candles, or some combination of that, when you've got a lot of supporting evidence. And the more supporting evidence that you have, the better off the gap or the price push is going to be. The 20, there's obviously you can get 22 out of 22 the MFR indicators going in the one direction. Seen it many times, and so the 3 patterns that you have are: 1, identical indicators, as many of the 22 as you can get, and they can come in one. They can come in, I seen one the other day, 777. There were 3 different patterns, 7 in each group, making a total of 21 patterns that pointed to a gap up. And so 1, 2, or 3 patterns is easily seen. I've seen them with 5, maybe 6 patterns, 2 or 3 identical in each of the 5 or 6. I think there were 15 or 16 total patterns. I think one had 4 in it, identical patterns. But the other 2 patterns going along with the identical patterns are the down touch patterns in the trend chart and the proximity group in the power chart. And so the identical indicators, the down touch, and the proximity group. The down touch basically has the trend red, green, and gray, which are your fast lines. They down touch the trend trio, we call it. And that is the pink, the blue, and the yellow lines. And those 3 lines are one of 3 groups that we call the short-term trend lines. The power green and orange is the other group, and the swing red and green is the third group. And the first thing that we do when we look at an opportunity is we examine those 7 lines and determine which direction they're going. Because when we built them, we tried to build one line and consolidate it into one line, like we did with the long-term trend line, or the master long-term trend line. And that, by the way, is the blue dash line on the candle chart. But as traders, we don't, the long-term trend line is nice, but we really need a short-term trend analysis to help us pick up on the pullbacks and the rallies that will take place. The 7 short-term trend lines do not find rallies and pullbacks It's your fast lines like your zip red and your swing pink. Those are probably the two fastest lines in the system. And then of course trend red and green and gray are quick as well. All the lines in the zip chart are very fast. And so we have a lot of lines that are leading indicators, telling us what's going to happen the next day. Back to the down touch, for example, we know the basic theme of DTVB is to pick up on reversal patterns. So when we have a down touch in trend red, green, or gray, it's going to reverse back up, and we're going to have an up movement, gap up or uptrend, or just one day, next day up. And so we utilize that information and deal with it accordingly. One of the requirements to have a gap up is that you must have one trend line that down touches one of the three trio lines, yellow, pink, blue, or zero, or under zero. And the rule for going under zero is that on the same day that for example, trend red crosses under zero, that is the day of the next day it reverses back up. And there are a few exceptions to that, and they have to do primarily with trend red just going under zero a little bit, and then it'll go one more day down before it goes back up. Either into a gap or a long green candle. So the trend red goes down under zero, but there's no line that it touches. It just physically spikes itself down under zero. And the other thing is, we like to see long spike down movements if you can in trend red, over 20 points if possible. That depends a little on the price of the stock that you're dealing with because of the movement within different price of like, when I say that, I mean that like a $2 to $5 stock versus a $50 to $75 stock. And there's not a whole lot of difference, but there is a little. Now, the third group is the proximity group. And this is the Power 4, which is the pink, blue, white, and yellow lines. And the fifth line that we watch in the proximity group is Power Zion. And there are 7 patterns that the proximity group can be in, and those are all shape patterns like the visual shapes of the pattern types up and pattern types down. And when the Power 4 appears in those shapes, then it can gap up. Keep in mind, you have to have a higher number of identical indicators and the down touch in the trend chart and the proximity group together. Often it works best if Zion is divergent with the Power 4. There's 2 types of divergence. The Power 4 lines are going up and Zion is going down, or the Power 4 lines are above the Power Orange line, and the Power Zion line is under the Power Orange line. When it's under and you have all the other conditions acceptable with that situation, when it's under orange, when Zion is under orange, you get a stronger gap situation. Also, in the trend chart, 70 to maybe 75 to 85% of all the down touches that occur within the whole system occur within the trend chart. And so you have to have one of the three lines, trend red, green, gray, down touching one of the 5 lines. And that would be the 3 trend trio, pink, blue, yellow, or 0, or spike down under 0. And when you get all 3 of the fast lines that spike down under 0, you usually get a stronger movement back up the next day. The qualifications for the identical patterns are you have to have a majority. You have to have 12 out of the 22 in one pattern, or you can have a combination of 12 in the other patterns. But I've seen gaps up with even 9, 10 and 11 happens occasionally. But the general rule is that we like to see a majority of identical indicators in 1, 2, or 3 patterns as that pattern then qualifies, and then we go on to the other 2 patterns. Can we find a down touch in the trend or in the trend chart? And then if we find that, what is the situation with the proximity group? And there are 2 different, the proximity group, one of the best movements is with the proximity group is above 0, it's above 0 and they're close to 0, and Zip Zion is under 0, under orange. Oftentimes it is under 0 as well, but the rule is under orange. Power orange. And it works just as well with all 5 underneath the power orange in a bottlenose setup, or in a 3-day down setup, or whatever the case may be there. And sometimes those lines are farther apart when that happens, but the gap up is strong. And so there are a combination of how do I say, a combination of proximity, or a combination of the power 4 lines in different positions that can go along with the other 2 patterns that make up the gap up situation. You can have 20 indicators in a stock and not have the gap down, and believe me, it's not going to gap. You have to have all 3 of those patterns working together in some fashion. There is more flexibility in the proximity group in different ways that it can appear. But after you review and see a few of them, you'll get the feeling of how those patterns would normally look, provided you've got at least 12 identical indicators and you've got a down touch in the trend chart. When you get, for example, trend red spikes down underneath 0, oftentimes trend green will down touch one of the trio lines, or 0, and gray as well. So you can have what we refer to as a triple down touch, and those are just increased evidence of a gap up, of a stronger gap up. And the best line to down touch is the best line that down touches is trend red, and the best line to be down touched is trend pink. And that is obviously because pink is the center line of that indicator. And also the trend trio moves faster than the other 2 groups. It'll tell you things are moving in that direction quicker. But when it comes to pullbacks and rallies, we always look at the trend red and trend green lines. When trend red, for example, has crossed over green and both of them are going up, you're in an uptrend until trend red turns down. That could be 2, 3, 4, 5 days. Likewise, when trend red crosses under green, they run reasonably parallel together and you're in a downtrend. So there's just a lot of information inside of this system. I can't possibly go through it all on this video. I just wanted to hit the highlights of what you have within the system. There are hundreds of videos. There are probably as many documents. I've got all kinds of documents that have been written and rewritten over the years that explain the different aspects of how the system functions and how you and what you can look for. You've got all the color codes for the box color alerts in the radar screen. We've built over 400 indicators. Could be close to 500 by the time you count everything. But you can use those indicators. They're pre-built. They're ready to go. You can throw them into a scanner and use them to build methods that you would find key setups for, because the most powerful part about this system is its ability to search and find deals, and then recognize those deals. Remember, these sensitive indicators are powerful in their ability to identify upcoming strong movements. The market strength, this is one thing that we were really adamant about when we started creating the system, and this was just when the system was going to be for myself. This wasn't on the agenda to even share this system with anybody else. I had to understand with some kind, I didn't know what it was going to be or how it was going to evolve, but I had to have some method to see the strength of a push. I didn't know what it would be, but just to give you an example, a bottom of a cycle pattern is a BOC pattern. That BOC pattern goes down and then up. When the up leg is higher than the left leg, you have what we refer to as a BOC higher pattern. When you have a BOC higher pattern, and I've seen lots of BOC higher patterns that are 8 and 10 times higher and more than the lower pattern, than the left pattern. When you have strength, that indicator line length gives you the strength, identifies the market strength of that push. And that's just that day. And when you have a strong push on the first day, it usually goes on. That there's obvious exception to that, and that is when you find a BOC pattern on top of a cycle. It's going to be, typically it's the last movement in the cycle, and the people that kept buying it pushed the price up to the top as far as they could go, and next day it's going to go down just as strongly as it went up. And that's a type of divergence, and divergence is very powerful in this system. Watch it and be aware of it. You can have divergence between the pairs. You can have divergence between different indicators. You can have divergence between the price and indicators. For example, the indicators are going down and you get a green candle. So there are a lot of different ways and methods to search and to find and to analyze. The system that you use is by far the most important thing that you will do. This is, obviously we're biased, but in our opinion, this is the greatest system on the planet for trading stocks, because I don't know of anybody out there that has the ability to identify stocks that are going to gap before the gap occurs. Nobody is doing that. They say they trade gaps, and what they're doing is they're waiting for the gap to occur, and then they grab a hold of it. And because it gapped way down, it's very volatile. So then they trade it back and forth. So it's important to realize the system is built on sharing this information with you. You have to make each and every decision, just as you always do. But to have the power of the sensitive indicators and to use the patterns with good conditions so that you pick trades that are always high probability trades. I mean, when you pick a pattern, you've picked a higher probability trade. But then when you throw the good conditions with it, then you have a situation where generically, in that example that I gave earlier, 2 out of 10 had a really strong green candle. Well, you can say the probability might be 8 out of 10 because 7 or 8 had green candles in that particular pattern. But some patterns generically come out, 40% instead of something like that example. Generally, because it went up, you would say that's a higher probability pattern. But we look at the 2 candles that we're looking at, finding the strong days. We have done we have searched high and low to determine how to validate the strength of a market push. And the indicator line length is one of the primary ways that we know that. Zip red, one of the fastest lines in the system, probably the fastest line. I think swing pink is the next fastest line. Zip red is a price barometer. Swing Zion is a price barometer. The 3 price lines, red, green, and blue, are price barometers. They move exactly with the price. So you can look at those real quickly. Zip green and Zip Zion, they track buyers in and out of the market, in and out of the stock. The Zion is the grandfather to the Zip green, and it takes a lot of power to put Zip Zion at 100 or at 0. When Zip green is at 100, there are a lot of people coming into the market. When Zion is at 100, there are many more people coming into the market. And likewise, when Zip Zion is at 0, there is a huge number of people leaving the stock. So putting those two, and that's why one pattern we have is pink green tops and pink green bottoms. And that's green, which shows the buyers going in and out of the market, and Zip pink, which is your price barometer. And that's right down there. It's always going down. In the case of a pink green bottom, it's always going down, and then there's a signal that tells us when it's going to go up. And there's four different kinds of signals that we can identify when that price is going to go, that's going to go off the bottom. So I think that's enough for this particular video. I wanted to highlight how the system worked and just have you understand what moves things and how they move. The system has the 3 powers: the indicator power, the formula power, which gives us the high probability trades. I mean, you never even have to find a gap, and you won't have any trouble, because with the 3rd power inside of that 3-step formula is the procedures power. And when you take and just compare those 10 indicators example that I gave you. Those 10, for example, 10 pink green bottoms came onto the off the scanner, and so you're looking at 10 of them, and you can quickly eliminate most of them because some of them will have the zip pink too high, or the signal won't be there. But the indicator, or excuse me, your reaction to what that analysis is what it's all about. That daily analysis of comparing the different indicator lines with how price is moving is the procedure of analysis. And I mean, it's not anything, we came up with this super thing, and well, that's just a normal reaction. But I will say and tell you quite adamantly that that was an absolute feature that we demanded to have within the system when we put it together. We had to have the ability to understand market pressures and the market forces that are within the movements. We don't know, we can't name the market forces. There's no name. I mean, maybe somebody's got some particular names for them, but I'm positive there's 5, 6, 7 different types of forces based on what I know. I can see indicator lines move. I can see different combinations of pushes. I can see what's going to happen the next day based on what those pushes do. And keep in mind, you can't see that on every single stock every day. These are just certain groups of stocks that you'll find that you locate through the scanner, and you hand pick those based on formulas that you throw into the scanner, and then examine what you find to see if the setup or the pattern is there that you want. And so, if you took all 20,000 stocks, you might find 15 or 20% with the patterns that you want for that day. And it might not even be that high. I actually don't know what the total count would be. But I just know that there's always plenty to choose from. Now, you take those market forces and you analyze them, and look at the 3 pattern group, for example, or we call it the 3 gap pattern group: the identical indicator, the down touch, and the proximity group, or the power 4 group. Those 3 have to appear at the same time, and the conditions, good conditions, have to appear with them. You have to have the 12 identical, you have to have a down touch in the trend red, and you have to have the proximity group power 4 in a shape pattern, one of the 7 patterns in the shape. And you can see more force if Zion is divergent in the 2 ways that I just talked about. Now, you cannot take those 3 together and look at an indicator line and say, yep, there's an indicator line. It is going to gap up tomorrow. It does not exist. It is not there. It's a combined force. What is happening is that the forces within the identical indicators, and the forces within the down touch, and the forces within the power 4 group, whatever they are, when they come together at the same time, you get a gap up or a gap down. And that's as simple as it gets. And all you have to do is find those. And in the beginning, it's tough. And I'll tell you up front that up patterns are easier to find than down patterns. There's just a lot more different types of down patterns than there are, what do I want to say, different types of conditions for down gaps versus up gaps. It's an amazing system. We stumbled into some of the stuff that we found, and we thank God for what we have found. But it is truly amazing. We're thrilled to be able to share it. We just encourage you to examine and be detailed in your examination, because it's real easy to miss something. Where's your zip yellow when you make the decision to buy or sell? Zip yellow controls a lot of aspects of how things work. Your big three, Trend Red, Power Red, and Zip Zion. When those three are down lowest, you get a stronger move up together. The three powers that are reflected in those three indicators give us much stronger movements up. Likewise, when they're all high, like for example, the first time they come into a BOC pattern, boom, you get it down. And once in a while you get like the power red will be up and the other two will be down, and you still get a red candle. Well, next day, that's just alerting you. It's a leading indicator. It's alerting you to the next day up with a green candle. Could be small green candle, but it's the start of an uptrend. So lots of information that I just gave you. That's how the system works. Read, and watch. It'll change your life. Because if you're serious about trading, you've just found the greatest trading system that we are aware of and that we constantly compare. Nobody comes close. And when you got the greatest system, you find the greatest opportunities. I'm absolutely convinced of that. Enjoy trading, have fun trading. When I was selling real estate for a couple of decades and then developing real estate for a couple of decades after that, I had fun doing it. I never enjoyed working in a building. I always loved the independence of having the freedom of being self-employed. And I loved real estate developing, and I loved this business that I got into as a part of my own situation when banks stopped funding small developers in the state of Minnesota. And so you just figure out what you got to do to make it work, as they say. And this system it works. You just have to figure out how to use it. Have fun, whatever you do. It's great to have something like this. It builds your confidence. It makes you independent. It increases your knowledge. And when you're constantly analyzing that market, you become familiar with how things move. And believe me, the guys in other, the floor traders and those people will tell you, oh, you can't, there's just too many factors. Well, let me tell you, there's 20,000 stocks that are making cycles up and cycles down every week, every month. And the repetition of those repeats, or that repetition puts market forces in similar conditions day after day, week after week, and the historical data that we can grab from that and compare creates the the high probability aspects of what we recognize as anticipated next day movements. So it's exciting. I'm thrilled to be a part of this, and I hope you enjoy it.